All right, folks, let's talk Palantir. You've seen the headlines, right? Palantir's stock up, analysts scrambling, everyone's trying to figure out what's next. But what if I told you there's a hidden reason, a butterfly effect that could send this thing soaring higher than anyone expects? I'm talking beyond the earnings report, beyond the analyst upgrades. Stick with me, because this is going to get interesting. Okay, let's set the stage. Palantir's stock price jumped, right? A 1.5% bump to $72.86, hitting a high of $73.43. Not bad, not bad at all. But here's the kicker, the volume. It plummeted, down from 68.4 million shares traded to a measly 22.9 million. What does that tell us? Fewer people are trading, but the price is still climbing. Something's brewing under the surface. And the analysts? Man, they're all over the place. Wedbush, they went full-on bullish. They didn't just nudge their price target. They launched it from $75 to a whopping $90. That's a serious statement. They're basically saying, this thing's going to the moon. Bank of America's not far behind. They upgraded their target too, from $55 to $75, slapping a buy rating on it. So, we've got two big players saying, yeah, Palantir's a good bet. Are you starting to feel the excitement? Because it's about to get dialed up to 11. But hold on a second. Not everyone's convinced. William Blair's sitting on the sidelines with an underperform rating. Now, that's interesting. Why the skepticism? What are they seeing that the others aren't? We'll dig into that later, because it's crucial to understanding the full picture. Let's talk numbers. Palantir reported earnings per share of 10 cents, crushing expectations. And revenues? Around $725.5 million, a 30% year-over-year increase. Booyah! That's the kind of growth that gets investors excited. No wonder the bulls are charging. Now, a little wrinkle in the fabric. Director Alexandra W. Schiff sold 4,000 shares. Now, before you panic, let's put that into perspective. She still holds over 195,000 shares. So, it's a relatively small transaction, but it's something to keep an eye on. Is she cashing out a bit of her gains, or does she know something we don't? The mystery continues. Okay, let's zoom out and talk about the bigger picture. Palantir's stock movement isn't happening in a vacuum. It's riding the wave of the broader technology sector. Positive sentiment in tech can lift all boats, and Palantir's definitely benefiting from that. But it also means they're vulnerable if the tide turns. More than that, Palantir's performance is influencing investor confidence in the entire data analytics space. They're a bellwether for the industry. If Palantir is doing well, investors are more likely to throw money at other data-driven companies. It's a rising tide lifting all ships again. And you know what that means, right? Competition's getting fierce. C3.ai, Snowflake, Oracle, they're all vying for a piece of the pie. Palantir's success is putting pressure on them to perform, to innovate, to stay ahead of the curve. It's a high-stakes game, and everyone's playing to win. Here's another clue. Institutional investors are actively adjusting their holdings in Palantir. Some are buying, some are selling. They're all trying to position themselves for what they think is coming. This activity is a sign that something significant is happening, that the smart money is making moves. Now, let's talk about the real-world impact. If Palantir keeps growing, it means more jobs. Software engineers, data scientists, analysts, they're all in demand. Palantir's success could be a boon for the tech sector and the economy as a whole, but it also raises some important questions. Palantir's platforms are helping organizations make better, faster decisions. This is accelerating the adoption of data-driven strategies across industries. We're talking increased efficiency, productivity, and potentially entirely new business models. This is a fundamental shift in how we work and live. But with great power comes great responsibility. Palantir's work with sensitive data raises serious ethical questions. We're talking about privacy concerns, surveillance risks, and the potential for misuse. These are not abstract issues. They have real-world consequences. And let's not forget about the environment. Investors are increasingly scrutinizing tech companies' environmental footprints. Palantir needs to demonstrate that they're committed to sustainability, that they're not just chasing profits at the expense of the planet. This is a growing concern for investors, and it's something Palantir needs to address. The performance of companies like Palantir has a ripple effect on the entire economy. It affects investor confidence, market stability, and overall economic sentiment. Palantir's success can contribute to a positive feedback loop, while its failure could trigger a downer. The stakes are high, folks. Okay, let's switch gears and talk about the risks. Palantir is heavily reliant on data-driven solutions. That means their success hinges on the quality, accuracy, and accessibility of that data. If something goes wrong with the data, Palantir's in trouble. Think technical glitches, data breaches, flawed algorithms. Any of those could be devastating. The technology sector moves at warp speed. Palantir faces the constant threat of technological obsolescence. Their proprietary technologies could become outdated, less competitive compared to newer solutions. They need to keep innovating, keep adapting, or they'll be left in the dust. And let's not forget about cybersecurity. Palantir handles sensitive data, making them a prime target for hackers. A successful breach could expose confidential information, damage their reputation, and lead to legal nightmares. This is a constant battle, and Palantir needs to be vigilant. Now, let's talk business risks. We're living in volatile times, with economic uncertainties looming. These factors can spook investors and send Palantir's stock price tumbling. Market fluctuations can also make it harder for Palantir to secure funding and pursue growth opportunities. That dramatic drop in trading volume is a red flag. It suggests that investors are hesitant, unsure about Palantir's future. Are they worried about something? Is there a hidden problem? This is something we need to pay close attention to. The contrasting analyst ratings, Wedbush bullish, William Blair underperform, highlight the uncertainty surrounding Palantir's growth potential. This disagreement makes it difficult for investors to assess the company's true value. It's a confusing situation, and it adds to the risk. That insider selling by director Schiff, while small, can raise eyebrows. Investors might wonder if she knows something they don't, if she's losing faith in the company's future. It's a small detail, but it can have a big impact on investor sentiment. Palantir faces intense competition from other technology companies. They're all vying for the same customers, the same contracts, the same market share. Palantir needs to stay ahead of the curve, to offer something unique and valuable, or they'll lose out to the competition. Palantir relies heavily on government contracts. This concentration presents a significant business risk. Changes in government spending, policy shifts, or contract losses could severely impact Palantir's financial performance. They need to diversify their customer base to reduce their dependence on government funding. Let's talk about the ethical minefield. Palantir handles sensitive data for governments and corporations. This raises serious concerns about surveillance, data security, and potential misuse. Palantir needs to be transparent about how they're using data to ensure that they're protecting privacy and acting ethically. Investors are demanding that companies be responsible, that they care about the environment and society. Palantir needs to demonstrate that they're committed to sustainability, that they're not just focused on profits. This is a growing expectation, and Palantir needs to meet it. Transparency is crucial. Palantir's operations, especially its work with government agencies, are often shrouded in secrecy. This lack of transparency fuels public distrust and ethical concerns. Palantir needs to be more open about what they're doing to build trust with the public and with investors. So, what's the verdict? Palantir is a high-risk, high-reward play. They have tremendous potential, but they also face significant challenges. The key is to understand those risks, to weigh them against the potential rewards, and to make an informed decision. Are you ready to take the plunge? But here's the real butterfly effect, the hidden catalyst that no one's talking about enough: ethical AI and transparency. Palantir's ability to navigate the ethical minefield, to be transparent about its operations, will be the deciding factor in its long-term success. Investors are increasingly demanding ethical behavior, and Palantir needs to deliver. This is the key to unlocking Palantir's true potential. So, there you have it. Palantir is a complex company with a lot of moving parts. The stock price is fluctuating, analysts are disagreeing, and the future is uncertain. But one thing is clear: Palantir is a company to watch. Invest wisely, do your research, and be prepared for anything. This is going to be a wild ride, folks. Thanks for watching.